Net effective rent. Why sophisticated CRE tenants focus on occupancy costs. Part 1 of 3. This is a three-part series about what commercial real estate tenants need to understand when structuring a lease through sophisticated CRE representation and negotiations. Part 2 of 3 will address commercial lease base rent, 12 factors to consider. Part 3 of 3 will discuss how to limit personal guarantee, 4 more business factors to consider on CRE lease. Part 2 and 3 are accessible at a small fee as courses at the ivyGroup.com/course-category/CRE-strategies-tactics. Commercial real estate, many tenants make the mistake of focusing only on the advertised asking base rent. A landlord may quote a lower rental rate, but that number alone rarely tells the full story. Sophisticated occupiers, especially experienced companies, investors, manufacturers, and institutional tenants, analyze the total occupancy cost over the entire lease term. This is where net effective rent becomes critically important. Net effective rent measures the true economic cost of a lease after accounting for concessions, tenant improvements, operational expenses, free rent, and other negotiated benefits. In today's market, asking rent and effective rents are often very different numbers because landlords are increasingly using concessions and incentives to preserve occupancy while maintaining headline pricing. Effective rents often trail advertised asking rents. For tenants, the best deal is often the lease structure that creates the strongest business outcome rather than the lowest quoted rent. What is net effective rent? Net effective rent is the true average cost of occupancy over the full lease term after accounting for landlord concessions and negotiated incentives, such as free rent, tenant improvement TI allowances, moving allowances, rent abatements, operating expense concessions, signage rights, parking incentives, expansion flexibility. In simple terms, net effective rent measures what you are actually paying once all negotiated benefits are included. For example, a landlord may quote $3 a square foot monthly for rent, 5-year lease term, 8 months free rent, significant TI contribution. The face rent remains $3 a square foot, but the effective occupancy cost becomes substantially lower once concessions are included. This distinction matters because occupancy decisions affect cash flow, operational flexibility, growth capacity, infrastructure costs, long-term profitability. Sophisticated occupiers understand that in addition to leasing space, they are making a strategic business decision by understanding the actual occupancy costs after concessions and incentives. 3 ways to understand net effective rent: total effective rent, average effective rent, and discounted effective rent. Total effective rent. This measures the total dollars paid over the full lease term adjusted for concessions. For example, 5-year lease, 10,000 square foot, $3 a square foot monthly rent, 6 months free rent. Without concessions, the tenant would pay 10,000 square foot times $3 times 60 months equals $1.8 million. But with 6 months free rent, 10,000 square foot times $3 times 54 months equals $1.62 million. The concession reduced the total occupancy cost by $180,000. This is real economic value. Average effective rent. Average effective rent spreads the total adjusted lease costs evenly across the lease term. Using the example above, $1.62 million divided by 10,000 square foot divided by 60 months equals $2.70 per square foot. Even though the quoted rent was $3 a square foot, the average effective rent becomes approximately $2.70 per square foot. That difference can materially affect budgeting, occupancy strategy, and long-term profitability. Discounted effective rent. Since a dollar paid 5 years from now is worth less than it is today due to inflation, Future rent payments are discounted back to today's dollars by calculating the net present value of lease cash flows. This is called discounted effective rent. We talked about the concept of time value of money in a blog earlier. Sophisticated occupiers and institutional investors often go one step further than total and average effective rent to use discounted effective rent when evaluating longer leases, larger tenant improvement packages, escalating rental structures, corporate occupancies, investment underwriting, sell leaseback transactions. For larger companies and institutional tenants, this analysis can materially impact financial reporting and occupancy strategy. The asking rent can be misleading. Why monthly rent is a mere starting point. Two buildings may appear similar on paper. Building A, $2.25 a square foot triple net. Building B, $2.65 per square foot triple net. At first glance, many tenants assume building A is the better financial decision. But what if building B includes 10 months free rent, larger TI allowance, better freeway signage, more power capacity, lower operating expenses, expansion/extension rights, stronger lease flexibility? Now the economics may favor building B. This is why experienced occupiers evaluate total occupancy costs more than just rent. A tenant paying a higher face rent may ultimately have a lower effective occupancy cost than another tenant paying a lower advertised rent. This is why experienced commercial real estate advisors analyze the entire lease structure more than the quoted rent, since monthly rent is only part of the story. One of the biggest misconceptions in commercial leasing is assuming the quoted rent determines the best deal. In reality, the structure of lease often matters more than the starting number. At the Ivy Group, we advise clients to evaluate the entire occupancy equation, including lease term flexibility, expense structure, annual escalations, TI contributions, operational efficiency, visibility, expansion/extension rights, parking ratios, utility capacity, future business needs, other risks and opportunities unique to each property and each client. A lower rent with poor lease terms can become far more expensive over time. In stronger leasing environments, landlord may reduce concession packages while maintaining higher effective rents. CRE marketing reporting from CRE recently observed that effective rents in certain sectors have begun outpacing asking rents as concession pressure eased in stronger submarkets as of December 2025. In part 2 of 3, we will list 12 factors to consider in lease negotiations. You can assess for a small fee at theivyGroup.com/course-category/CRE-strategies-tactics. Subscribe to the Ivy Group newsletter, theivygroup.substack.com. Contact the Ivy Group, theivygroup.com/contact-us. About the Ivy Group. The Ivy Group specializes in commercial sales, leasing, investment advisory across Fremont, Silicon Valley, and the Greater Bay Area. With over 100 years of combined experience, expertise, and designations, including SIOR and CCIM, the Ivy Group provides strategic guidance for complex transactions in commercial real estate. When you need to sell, buy, or lease, the Ivy Group is ready to help you reach your goals. Contact us with your next real estate needs. Disclaimer: all information shared in this article and in all blogs, case studies, and courses offered by the Ivy Group are for general education only, not tax, legal, or investment advice. Please seek professional advice from tax, accounting, legal, and other professionals.